computer. All right, we're going. Good morning, everyone. I'm Josh Knoll, Gulf Coast Financial Advisors. Thanks for joining us on this live webinar. We are going to be talking about what investors need to know about real estate in Lower Alabama. And we're going to be joining me today is the broker and CEO of Harris Vacation Properties and Harris Realty Group. His name is Brian Harris. Brian, how you doing?
Josh, we're doing good down here. We're holding on with both hands. I like to be positive, but I think holding on with both hands is probably the right response to that question right now.
Well, are you both hands, or are you hanging on with your fingernails yet? How?
We were fingernails for a few weeks there. I think we're past fingernail stage now. So we're kind of through this mode, but still making sure that we're looking strategically at the market and seeing what things are going on.
All right. For those of us joining us, and then of course we're going to release this webinar later. Let's do a little background on Harris Properties and that you run, and then we'll dive into what we're going to talk about today. So tell us about your different companies.
Sure. So we've got two main divisions, two main brands. Harris Vacation Rentals. That's kind of standing on the shoulders of my parents. They bought the first beach cottage back in 1983. I was 4 months old when they bought that. The quick version of this story is they took my brother and I's college fund and put in a down payment of that first house. And then they just kept kind of growing it from there. And I started helping with the family business, kind of in college, and then came down to help, more fully. And that created the brokerage and managing other people's properties. So now we manage about 120 properties. We try to be very kind of boutique style, high service, both for our owners and our guests. And then we also have the real estate sales division, Harris Realty Group, that serves the investor community, the second home community, and then the primary housing community in the Gulf Coast and the Eastern Shore down in Alabama.
So you've been involved with the real estate market down along the beaches in Lower Alabama for how many years?
Really, it's when you start the clock. You can start it at 4 months old. You can start it at, grad school. When I first got down here and got my license as a realtor in 2010, really with the sole purpose of creating the brokerage and the management company. But a solid 10 years, as a licensed, professional.
Very good. All right. So let's jump into this, because I think I recognize some names on here. We got some people that actually invest in real estate. So in the rental market, let's just start with 2020. How was 2020 starting out, and walk us along that path?
Well, and today we're just going to talk in kind of general, ballpark numbers. We'll have more data points as we run through these next series of shows in the coming weeks. We got companies
that you actually have actual reporting numbers coming over the next couple of weeks, correct?
Yeah, we'll have actual, reports coming out. The 2020 was a terrific year. We were up about 9% on revenue. We were having strong sales throughout all of our seasons. We were seeing a great spring developing, a great, summer filling in. A lot of demand for these large mega homes, these big 6, 8, 10 bedroom homes with private pools. A lot of demand for the more cottage type 2, 3 bedroom homes. A lot of demand for, off the beach type stuff. And then obviously all that changed. And one of the things I want to do is kind of let people understand that, yes, we're in a crisis situation right now. And one thing I want to just take a second and pause and just say that, we're talking about business and real estate, and there are people that are, fighting for their lives with this disease, and there are loved ones that have been affected, losing, people that they love, and very tragic, lonely circumstances, as I'm sure we've all heard. And I think our thoughts and prayers should first go out to them and what they're going through, and what our medical teams and first responders are going through right now. I don't want to make light of their situation, but we are wanting to be here talking about real estate and that sort of thing. That's what we do. So
I think that's a good point. I mean, the courage it takes for someone to willingly walk into the lion's den right now with these infections at the various hospitals. I mean, I'll be honest with you, I respect that more than anything.
It's amazing. And I'm hearing stories of people leaving, Texas and going,
Right.
to New York, to do this, to be a nurse and to help. And it's amazing. So, our hats off and our prayers to them.
Yep. So in regards to this, I had a buddy that always said, if you walked up to any person on earth at any time and said, I know what you're going through right now and I'm here for you, you wouldn't have anybody ever say, what are you talking about? So what we're going to be talking about here is people going through the pain points as it relates to real estate, investing.
For sure.
Are they already in the market and are they experiencing cash flow problems? Are they thinking about getting into the market? Are they someone that was actually maybe looking at traveling down here? I think you have a unique perspective on the front lines along our beaches and on the lower part of Baldwin County to kind of fill everybody in front line, not just stuff they're hearing secondhand through the news or getting stuff off AL.com, which really doesn't
Right.
call attention to the beaches. So let's jump from there. So what has been the immediate effect on your business from the coronavirus and what has developed?
Well, the biggest thing for our business is we saw basically like a light switch go off, going from a really positive, successful first half of March, and then just having that, bottom fall out of the occupancy on the rental side with the second half of March. And then that's obviously continued through April. We're still getting a trickling of bookings coming in. We're still seeing people that want to, if they're going to have to be sheltered in place, they want to be in a nice place with a pool or a view. So we are still getting some of that. We're actually doing a charity type thing where we're trying to give away free room nights and ask people to help some local charities here in the local area. But just to try to get people down, just try to get people a couple of nights of, not looking at their bedroom ceiling, but over the Gulf Coast. And I think that's one thing to remember while we're in this crisis where everything looks so dark and bleak. The beach is still beautiful. I was there just a few days ago with my family. We had a private pool and the kids enjoyed it, and we had that time together. And it was, even in those moments, you're making memories that are going to last forever. And that's something to consider. Like the magic of the Gulf Coast and the beach is not gone. It's just kind of paused.
Right. Yeah. For those of us joining us that maybe aren't familiar with the beaches, they're closed to the public, but that doesn't mean you can't still go down and look at them. And then as a boat owner, I can tell you that the ramps are still open, and we've actually taken our boat out a few times. Obviously, now that they are enforcing 25-foot distance between boats, which, to be honest with you, is pretty easy to do. As long as you don't go tie up on the island next to somebody else, you're being respectful of that.
Right now, the beaches, public and private, are closed in Alabama, and we did have patrols coming by. They're very courteous. Everybody down there is down there responsibly. Nobody's doing dumb stuff that we saw. But there's not a lot of people down there either. So.
All right. So Brian, you have tell the listeners again, how many properties do you manage down there?
So we manage about 120 properties.
Okay. Give somebody that's not familiar with the property management an idea of how does that compare on the scale? Is that big? Is that medium? What are some of the sizes of the companies down there, all the way from mom and pop to what?
Right. I mean, basically it starts at, 2 to 5 and goes up. There's big mega worldwide companies that manage 120,000 properties. We feel like, where we are, we're big enough to get the right technologies, the right security systems, provide the right sort of marketing that we need to for our owners, but not so big that we're losing, sight of who we're actually working for and who our main client is.
And you've got,
so we feel like we're in a really good spot.
With as many years as you've been down there and your family's been down there, I feel you probably have some connections to quite a few other property management owners.
Yeah.
And yeah.
Sure.
can you fill people in on, is there a general consensus, or is it still a matter of day to day trying to figure out what's ahead of everybody?
I think everybody, is concerned, just with the question nobody can answer is how long will this last? Everybody can make it for a while, but can you make it? It depends on how, and we'll go into this in some of the slides, but what's the prediction on when we get back to normal? I think a lot of vacation managers are frustrated with that kind of 2 to 5% of people that are really kind of, raking them over the coals because they can't just magically give, money away. We're in a unique position where we've got two clients. We've got an agency relationship with the owner, and we've got an agency relationship with the guest. So we just can't, hand money back and Airbnb and VRBO and what they, done or tried to do is a whole different, podcast. We won't get into all that right now, but we're just trying to, for us, we're trying to make a cancellation policy that's fair and reasonable and that we feel comfortable with on just a human level. And then we've just got to go with that. Everybody's not going to like it. In this situation, you can't make everybody happy. You just have to, do what you think is fair and honest, and then go with that. And if situation changes, then you have to change with it. And we have on several occasions, but we've got a fair, honest cancellation policy. And I think that most of the property managers down here are trying to do that same thing.
All right. Well, I'll tell you what, let's do this. You mentioned the slideshow. Let's talk about statistically what quote unquote experts feel is the percentage chances of things getting back to normal. Can you pull that up? If you can, I can't.
Yeah, I'm going to screen share. Let's see. There we go. Okay, can y'all see this?
Yes.
COVID-19.
Got it.
All right, we're gonna play with this here. Let's start here. This is a picture I took just a few days ago, really. Like I said, we were down there with our family, just changing the scenery a little bit. This is the beach scene out in Fort Morgan as the sun's obviously setting. And that's what I want people to remember. Like, we're in a crisis right now, but this hasn't changed. This is what's there. This is what makes it magical. This is what your kids are, building sandcastles with and riding waves, and this will still be there. We will get back to a portion of normalcy, and this is still going to be there. This is still going to be a good investment when we get back to that point. So I want people to remember that as we're talking through all these numbers and that sort of thing. This is what we're really talking about. Okay, so let's start with the rental market. Good news: 2020 was off to a great start. 2019 was a great year. And the other good news is the Gulf Coast is really in a terrific position to rebound quickly, and I'll dig into more of that later. The bad, kind of starting in mid-March when it's kind of started for the whole nation, we had massive cancellations. The first half of March was on track to be very successful. The second half of March was almost non-existent. April's the same way. Basically, I think we're at like 16% occupancy. We should be at, depending on which week you're talking about in April, 70 to 50% occupancy. We're also getting cancellation requests for the month of May and beyond, which we're trying to obviously hold on to owners' reservations and money that we're holding in trust to hopefully see, this crisis pass and allow us to get back to normal. So the bookings are off, so people actually calling in and booking, those are off about 70%. So there's not a lot of current demand for booking travel right now. The flip side of that coin is that we are seeing a lot of last minute demand. Like I was talking about earlier, we're seeing people for both short or long-term stays. And this is, 3 nights to we've had people book 30-night stays at spring rates because if they're going to be in a specific home for that time, they want to be in a specific home that's got a great view and a pool, and we've got that. So we're making some, nice bookings for those types of properties. All right, so there's that beach picture again. Last minute deals for travel. So 50%, obviously the reservations are down, but 50% of the reservations we've booked in April have been for April. Okay. Normally that would be about 10%. So what we're seeing is people saying, hey, if I've got to be cooped up in this house, I want to be cooped up in a house, that's got a nice view like we just saw in a pool, and the kids can, get some of that energy out. What does that mean? Well, that means that people are seeing the Gulf Coast as a safe place. And some of them are seeing it as a safer place than their current, location, be it, maybe that's a place that's, more at risk.
Densely populated.
Yeah, it's if you've ever been to the Fort Morgan area or the Gulf Shores, market, it's a low density. Fort Morgan even more so than Gulf Shores. And I think that what we're seeing is, the single family homes specifically be more in demand because, you don't have all the, human congestion. All right, so let's talk about when do we get back to normal? And that's kind of everybody's question. And we really just have to take an educated guess at this. And I put kind of, asterisk normal because we don't really know what normal's going to be. But here are just my kind of, off the cuff projections. Obviously, April's not going to be normal. We know for a fact there's 0% chance of April being normal. I'm putting May being normal at a 20% chance. And then we just kind of go down the line, June and July and August. We know it's going to come back. We know there's going to be a lot of demand, but we don't know when that demand will hit. One thing I think, and we'll talk about this now, is the Gulf Coast is in a really good position to bounce back very quickly. And there's a couple of reasons that I think that's true. I think one of the main reasons is that we're, for the majority of our guests, a drive-to destination. So people aren't having to think about where we're not to get on a plane to get here. Most of our people are driving, packing the minivan and driving down. Another thing is that we're very low density, especially the Fort Morgan area. I tell people if they've never been to Fort Morgan, you're going to love it because there's nobody out there, or you're going to hate it because there's nobody out there. I mean, it is what it is. And you saw that picture. I mean, it's a fantastically beautiful spot, but it's very low density. And right now that's probably a notch in its favor. Single family homes, I feel like they're in a better position than the condo towers, for obvious reasons. There's just less human contact. There's no shared elevator. There's no lobby. There's no community pool. It's in a single family, property, which we're majority single family properties. We have, great condo units too that we can certainly rent, but majority single family. And we feel like those are going to bounce back a lot quicker because people are going to be a little bit concerned about, getting into an elevator with, 7 other people. So we'll keep going. So now let's shift over into the real estate side of the equation. So we just talked about the rental side. When does that come back? We don't really know. We're taking some educated guesses and trying to build some financial models off of that. But let's shift gears here and let's talk about the real estate market. And one of the problems, and Josh, I was telling you about this yesterday, is a lot of the data sets that we use are based on the lowest number you can get is a month.
Right.
This kind of happened in mid-March, and now we're in mid-April. We don't really have any months to go on. So we're pulling some numbers together and some, more, we have to use a little bit more brute force to get those numbers. So we'll get those numbers to you. The good, we still are seeing some deals close. We actually just closed a deal selling a property out in Fort Morgan. It's going to be a primary residence for a gentleman that lives in Atlanta right now. So he's excited about getting down here. We're still seeing an active real estate market. So, if you're hearing things like there's nothing selling, there's nothing moving, that's not the case. There are still closings happening. There are still showings happening. We're moving a lot of stuff to virtual open houses, virtual showings, remote closings. I mean, we're taking steps to be cautious, but the active real estate market is still happening. And interest rates are low. Now, interest rates are going to move around a lot. I'm not the loan expert, but right now interest rates are very low. So if you've got the ability to purchase, this is probably a very good time to purchase. And we've been saying for a while, for the last 2 years or so, our pitch to investors is, hey, this is a good long-term investment, but if somebody's telling you're going to go make 12% cash return on this investment right now, they're not telling you the honest truth. But now that's changing. The market's going to change and going to come back to a better buyer position. All right, so let's talk about the bad that we're seeing. We're seeing some deals that are under contract fall apart. And what we're seeing is what I'm calling the strategic pause. Buyers who have been shopping or were under contract and had an opportunity to get out of that contract are taking that opportunity. Probably every deal that closes, there's 3 or 4 that they said, no, we're not interested anymore. And I think mainly it's just a strategic pause from the buyer side where they're saying, hey, I don't want to buy it today if I could buy it, in a month or two for, 20,000 less, 30,000 less. So there is that part of the buyer side equation. So what's going to happen over the next weeks and months? So my prediction is that we're going to have more sellers in the next 12 months than we have buyers, and that's going to push the prices down. And there's 3 different categories of 3 different groups I want to talk about now. So we've got owners of vacation properties or second homes, investments that don't really need to sell. Okay, they're stable, their property's stable, they don't need cash, their balance sheet's good, cash flow's good, job's secure. We're going to talk about that group. We're going to talk about the owners of vacation and investment properties that either have considered selling, have their property listed currently, or they've had a disruption in their financial picture and they need to reevaluate. Okay, so that's our second group. And then we've got the buyer investor side. So we've got the group that is looking at, hey, I'm in a good position. I've thought about this, or maybe the idea has been brought to me now, and this might be a good addition to my portfolio. What can I go and invest in and purchase? So that's our third group. So we'll work through those now. All right. So real quick, key metrics that we don't actually have data for today. We're going to have this soon. Just the current inventory. It's called absorption rate, a trend in closing transactions, a trend in pending listings, so that's about to close, a trend of back to market. So that tells me that a deal fell apart. It was under contract and now it's back on the market. And then a trend of price reductions. And we'll get into that in just a second. All right, so here we're getting back into our group. So what to do if you're an owner, things are stable, you don't need to sell. I would say, 1, you just ride it out. Okay, if you don't need to sell, you're not in a bind, just ride everything out and just wait. wait for the market to come back before you do anything different.
It's similar in my world to people with 401ks, in that a lot of people say I've lost a lot of money in my 401k. Well, that's not actually true until you realize the loss, until you sell the position.
Right.
Well, you sell the position, you realize the loss. But if you can hang on and you have faith that either that investment on my side or the property on your side will
Sure.
eventually get back to the current value, then you have not technically lost money.
Exactly. Great. That's exactly what we're trying to say. And it really just depends on, what the personal balance sheet, what the personal financial position looks like. And that's why this group is just owner that doesn't need to sell. There's no pressure to let go of that property.
Right.
I would say hold and ride it out. Now, the second thing that you need to do, if that was a rental property, you can apply for the SBA disaster loan and have a possibility of having some of that grant money, in that loan. That's something we've encouraged our owners to do. If you have an LLC, it's a very straightforward process. Excuse me. If you don't have an LLC, we don't know exactly how they're going to take these, kind of sole proprietor type situations. But our contention is that these are, individual small businesses, and you should be able to apply for those loans. So I definitely would, if you have rented this property and have proof of that, I would apply for that SBA disaster loan. You don't have to take the loan, but you could have a good loan, and you could have a possibility of some of that grant money hitting. So that's what you do if you're an owner with no pressure to sell. So now let's say you're an owner seller. Okay. So you own this property. You have been thinking about selling it, or you have it listed for sale. We've already had these conversations with several of our owners. If you need to get out of this property, I would say move quickly and aggressively to lower the price and get a buyer. And the reason I'm saying that is that I think there's going to be a trickling of price reductions and activity now on the seller side. But I think and that's going to be over the next, 2 to 8 weeks. But over the next 2 to 8 months, I think there's going to be a lot of people where this really hits home. These layoffs have continued. The joblessness has continued. The deferments have run out. There's nothing more the banks can do. And there's going to be more of like a tidal wave of distressed properties that are going to hit the market. That's my prediction in the next, 2 to 8 months, because people's balance sheets are just not going to be able to carry these properties that they financed. And some of that, again, goes back to, last year or two, we've had financing at 90% loan to value on these, vacation condos. We've had 95, we've had 100%. If somebody's doing 100%, financing on a condo, that there's not a lot of room there on the balance sheet to make that work. If anything little, sand gets in the gears, you're going to have a problem.
Right.
And obviously there's a lot of sand in the gears right now. So if you have a vacation property or an investment property and your situation has changed and you're seeing that you need to let go of that, you need to act quickly. You need to get your price to a point where you can get a buyer, and you need to get that under contract and get it sold. Because you don't want to have your listing that's sitting here get swallowed up by a big tidal wave of property inventory that comes on top of it that's more distressed and more motivated than you are. So I would say act fast. Also, if that was a rental, you can be in that same camp. Apply for the SBA loan. Another thing that you can do, and Josh, this is a little bit more over in your side, is borrow. I know there's a lot of more leniency in borrowing from your 401k right now. So that's an option if you need to get through a certain time period. And there are some more strategies, and we can dig into this in later weeks of how do we keep this property on. Maybe we can focus on some of those strategies later on.
And
All right.
Brian,
The last group I want to talk about is the buyer investor.
Brian,
Okay.
let me throw a little compliance caveat in
Sure.
there. If you all are looking at your 401k, it would absolutely behoove you to talk to an advisor, not even just, I'm not saying for me, just any advisor, they have loosened the rules, but it doesn't mean it's necessarily something that you want to do, knee-jerk reaction, if you will, and it all pertains to your particular situation. But yes, Brian, what you said is a very fair point. We call it the save yourself option, and we're absolutely having some of those conversations. So back to you. Thank you for that.
Yeah, Josh, and thanks. And we've got to clarify that, I'm a real estate broker and investor, but I'm not an accountant. I'm not a financial advisor. So, everything that I'm saying run past, professionals that you trust, accountants, lawyers, investment advisors. And that's one of the things I want to talk about, on this slide is finding good people to work with.
Right.
If you're a potential buyer, I think one of the first things you need to do is connect with an expert. Connect with somebody that's not doing this today and didn't do it yesterday. Find somebody that's been doing this consistently and well over the course of the last years and is an expert in their market.
Right.
And we work on the Alabama Gulf Coast for the most part. We have some of our realtors work in the Florida markets as well, but we've got good connections in resort markets throughout the country. So we can certainly connect people with good local experts wherever you're looking or need help. So find an expert and be honest with that person. That person, when you sign an agent relationship with that person, they're fiducially bound to you to work as your agent. They're going to look out for your best interest. You can be honest with them, and you should be honest with them. If you don't want a condo, say, look, I'm not going to buy a condo. If you got to have beachfront, tell them that. If you want the absolute best return on investment, tell them that. They know where the deals are. So find a local expert and work with them in an honest relationship. The next part is great agents are going to be worth their weight in gold, and great experts. I've leaned on bankers and accountants the last 3 weeks more than I ever have in my professional career, and they've done an amazing job. And they've done stuff in minutes that would have taken me hours or days to do. So you've got to find the experts and use them. One of the things that an expert in a market's going to do is find off-market deals for you. A lot of these distressed sales are not going to go to market. They're not going to go, listing, yard sign, the traditional route. They're going to be, seller's going to call their agent up and say, hey, I'm thinking about doing this. And that agent's going to know buyers on this side that are ready to go. And that's going to happen quick. And it's not even going to come. You're not even going to know you missed it. Right. If you don't have an agent, working for you in that capacity. They're going to be able to lead you in the right direction on HOA and neighborhoods. We tell people if they're buying into HOAs or condo associations, you're buying a little business in a big business. You need to know how that business is working. So they're going to know what's stable and what's not stable. And then it gives you just a really powerful negotiation fulcrum to work on where you don't have to be the bad guy. You don't have to be the one asking for something. Right. That agent can go and do that. And if you're not getting the deal that you want, then it's time to cut bait and move on and find the next one. And they can do that really well. Be patient. So if you're a buyer investor right now, I would say be patient. If you're serious about this transaction, there's things you need to be doing right now. And if you're on this call, you started that journey. You started kind of putting the pieces together. What do I need to do? You need to be patient though, and make sure the deal is the right deal. Okay. Because I think the deals are going to become more and more frequent as we go. But when you get the deal, you've got to be able to pull the trigger. You've got to be able to make it happen. And to do that, you've got to have all your financing set up. You got to know where your cash position is, where your financial position is, and be ready to go when it's time. Now, I will say this. As we move into a digital age and everything is, .com, Amazon, convenient, there's a lot of advertising out there for kind of national branded mortgage companies. And I think those have a terrific position, terrific place in the market, especially for refinances where there's no real time crunch. It happens when it happens. But in especially these resort markets, you need a local presence, whether that's Gulf Shores or whether that's San Diego or Breckenridge, wherever that is. You need a local lender that knows the local market, knows the different associations, knows the different neighborhoods, and can work you through that process. And then the last thing here is good deals won't last long. If it's a good deal, somebody's going to grab it. So be ready to go.
Be quick, but don't hurry.
Yeah, right. Be patient, but hurry when it's there. And I think that's the last slide.
Well, I think, Brian, what I'd like to do now is let's open it up for Q&A and see if we got anybody. And those that are with us, you can do Q&A by typing it in. If you want to raise your hand, I can see you, Brian can see you, or we can also do the chat. Let's see what we got here.
I turned that screen share off, I believe.
Yeah, you did. You did great. And Brian, I'm gonna tell you right now, that was fantastic. I mean, that basically laid it all out. And I appreciate your not bluntness. You're not a blunt guy, but I appreciate your straightforwardness on the information in there, because it's a lot of this stuff that's going on right now. I don't want to say it's like 2008, but there's definitely some shades of it. And part of the shading of that is just there's a certain amount of denial that comes in the beginning. It's almost like the stages of grief, if you've ever read those.
Sure, absolutely.
And really what someone needs to work to very quickly is just acceptance and new plan, and have your plan written out, have your plan thought out. And that's on the buyer side, that's on the seller side. You need to work through this really quickly. I know it's, for some of y'all that are on the wrong side of this, it sucks. But denying it or trying to hide from it's not going to help it. You need to attack it head on. You need to have a written plan, and you need to execute that plan quickly and unemotionally, especially if your livelihood depends on it. So, all right, if y'all can hear us, if anyone has any questions, let me know. We are also going to be doing this weekly because, as Brian iterated earlier, there is a lot of actual hard data points that have not been released yet. Brian, when that comes out, that is really going to be something.
Well, it's going to be something to see on the month as the months stack up. But we're actually working to try to get weekly data and crunch those numbers to try to get a more clear picture of where we are. Hopefully by next week we'll have some of that. We can start seeing some trends and go from that point, because we're really on a week to week timeline right now. It's almost like we can't wait for monthly data to come out.
It's very true. Yeah, I mean, it's the whole reporting thing is, it's unbelievable. All right, so I tell you what, here's what we'll do. Y'all, got a couple things before I wrap up, and I'll let Brian have the last word. One is Brian and I are pretty active across multiple platforms, especially LinkedIn, where we will post this video. So you can find both of us online, especially if you have a real estate question as it pertains to along the Gulf Coast and the rental market. Absolutely reach out to him. He is the broker and CEO of Harris Vacation Rentals. That's HARRIS Vacation Rentals and Harris Realty Group. And then so send the questions you have there. Second, on this, Brian, I appreciate you doing this with me, because we've been doing some of the folks are on here on some of our other webinars that we've done. We do these. Yes, I'm a financial advisor, but honestly, we've always viewed ourselves as business advisors first. And quite honestly, down here in Baldwin County, the majority of my entrepreneurial clients have real estate holdings. I mean, it's unusual for anybody that I deal with as a client that is an entrepreneur or business owner to not have at least a portion of their portfolio in real estate. It's just, that's the market we have down here. So, the information you provided is incredible, and I'm going to make sure that I get my clients on the next one as we go through this. And then lastly, Brian, I've got to do just a very quick disclosure, and then I'm gonna leave it up to you.
Sure.
So for those of y'all watching this, I am Josh Knoll, Gulf Coast Financial Advisors. I'm not affiliated with Harris Properties Management, Harris Vacation Rentals, Harris Realty Group, nor is Brian affiliated with Gulf Coast Financial Advisors. We are friends, and we both are business owners here in downtown Fairhope, and we do quite a bit of work in Baldwin County. My advisory services are offered through Prime Capital Investment Advisors, PCIA, a federally registered investment advisor. The following commentary and responses are the opinions of myself, Josh Knoll, and of Brian Harris, and are not necessarily the opinions of PCIA. They're for informational and educational purposes only. Should not be considered investment advice. Past performance is no guarantee of future results. No guarantees expressed or implied. So with that said, Brian, I'm going to turn it over to you for closing. You did a fantastic job, and we are absolutely going to do this again next week.
Yeah, Josh, and thanks for putting this together and let me be a part of it. I'm happy to do it. I think for the biggest thing is if you own a property, you need to really be sitting down kitchen table style and looking at, where is my personal financial picture? Do I need to have a conversation about letting this go? And honestly, it's okay. Like, you're not a bad investor. There's a lot of great business people that have no businesses right now because of things they can't control. It doesn't mean you did a bad job or bought a bad property or, I'm looking at, stuff that's 4 weeks ago, and the numbers are completely different in my business just from 4 weeks ago. So it doesn't mean that you don't have to wear that, shame of I'm terrible at this. It's just what it is. So don't be afraid to have conversations and get advice and find experts that you trust to work with. I think that's the biggest thing, is don't put your head in the sand. There are ways out, but you got to go and have conversations to find.
Perfectly said. All right.
And if you're on the buyer side, it's really the same thing. You've got to have a clear picture of where you are, where your financial picture is and what you want to do.
Very good. All right. Brian Harris, Harris Vacation Rentals and Harris Realty Group. I am Josh Knoll, Gulf Coast Financial Advisors. Frank and some of y'all that have thanked us, thank you for joining us.
Yeah. Thanks, Frank.
Next week, and we'll talk to y'all later.
All right. Thanks, everybody.